How is the Florida housing market doing? Well, if we ask Saks Realty with the video they just came out with in the last couple of days, you can see they have 107,000 views, and Florida's housing market is in deep. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And whenever I find myself going down the YouTube rabbit hole, which I do sometimes, I like to click into the channel and see what kind of content are they producing. So you can see right here in this Saks Realty, it is literally one video after another: financial crash, foreclosures, bubbles, job crash. I mean, whatever, you name it. Any negative headline is what their videos typically are going to be about. And why? Because that's what people want to watch. That is shown again and again in the algorithm. That is what will make your channel grow. But in these videos that I do, I'm really trying to look at, especially here in Central Florida, but really all of Florida and all of the US, because every market is hyper local, but trends do matter. What is the trend? Where are we headed? Where are we at now, and what's likely to happen in 2025? Well, one of the things that just came out was Fannie Mae's 5 big predictions for 2025. So let's look at that and see what they're saying, and I'll give you at least my opinion for what it's worth of being in the mortgage business for 23 years and looking at a lot of economic data, what's likely to happen as we go through this year and even on into 2026. I always like to take a quick look at rates just because week after week, we want to get a trend for what's happening. 30-year fixed rate, 7.08%. And when we look at the trend, again, we are in the 7% range, bouncing around. Now, we did have a dip this week where we got almost 8.25% better in rate, which is significant. But in general, just means rates staying right around that 7 to 7.25% range. Now, like every range, everyone's rate's different. You can different credit scores, different loan programs, different down payments, different discount points. Lots of ways to manipulate the rate. If you have questions on that, reach out to me because every client's rate is going to be a little different. But regardless, the trend right now is fairly flat. And so go rates, so go the market. So let's take a look and see what Fannie Mae is saying for 2025. So these are the 5 housing market predictions for 2025 directly off of Fannie Mae's website that I pulled down. And number 1, average mortgage rates will likely decline modestly but remain above 6% with likely bouts of volatility. And they kind of show a lot of these trends of reports and different things that are going to affect interest rates. I really like to look at this chart here, where we broke out all of the big forecasts for 2025 from Redfin all the way to the National Association of Realtors. And you can see most of the market in this 6.4, 6.3, 6.5 range. And I kind of agree with Fannie Mae on this 100%. Rates are likely to go down throughout 2025. And this is back to where the trend is. We were at almost 8% or pretty right at 8%. At really beginning or middle of last year, had a big dip, and then now we're right back over 7%. But so we want to see rates go down, but we don't want to see them go down, super fast, right? Just like rates went up really, really fast when the Fed started raising the Fed funds rate. We really want a controlled descent, and that's what we're likely to see in 2025. At least that's what I think, and Fannie Mae as well. Number 2, existing home sales will remain near 30-year lows, but location matters. We forecast existing home sales to total 4.25 million in 2025, an improvement of 4.8% compared to our expected 2024 pace of 4.06. Said more easily, we're expecting a little more sales in 2025 than 2024, but not a lot. This is the thing that is really, really affecting all markets. Affordability conditions remain at the most constrained levels since the mid-1980s. Additionally, we expect the lock-in effect to remain prominent even if mortgage rates move closer to 6%. And you can see here the majority of mortgage holders remain locked in with an interest rate below 4%. And look how many people they're saying have a rate below 4%. This is a better chart here. It really breaks down the national market. 21% of people have a 3% rate, 33.9% have under 4%, and then 18% have under 5%. When you add all of this up, that is well over 50, 60 plus percent of the market that really needs rates to fall a substantial amount to move. That is the lock-in effect. If everyone asks, why has prices not declined? It's simple because so many people are not in financial trouble. They've got the lowest payments in history with the lowest rates. They have the most amount of equity. And when we look at what happened in 2008 and 7 and 8, that was the exact opposite. So that is the lock-in effect. And those people, I know I have an investment property right now that has a 3.5% rate on it. I would never refinance that, and I would never want to sell that house. So those rates lock in inventory. And number 3, new home sales will remain a bright spot in the housing market where they can be built. And they kind of go through here and talk about just the land is getting more and more limited. Obviously, the places that people want to live, that land gets bought up, right? And so those houses take a while to come out of the ground. But new home builders have really just crushed it, both in their stocks, meaning if you're investing in them, which I do, some of them, and if you look at their sales, because they have really held the interest rate down. Instead of doing any kind of price correction, what builders are focused on is giving people a lower payment and holding their prices up higher. Number 4, national home price growth will decelerate. We currently project year-over-year home price growth will be 3.6% in 2025 as measured by the Fannie Mae Home Price Index compared to 5.8% in 2024. And again, they say this all through the article. That said, there will likely be considerable regional differences. And that just makes sense. I mean, even in Florida, I think this is probably one of the most frustrating things for buyers in our market. If you're looking in Seminole and Orange County, which is kind of central Florida where I'm at, there are houses that get 6, 7, 8 or more offers, and literally half a mile away or a mile away, there's houses that are sitting with no offers. Some of that is the pricing, meaning sellers are still trying to get wish pricing, and a lot of it's just certain areas. My office is in downtown Oviedo, and Oviedo in general is highly, highly competitive. You can get right outside of Oviedo and have a totally different picture. Good real estate advice right now is at a premium, meaning knowing a realtor that knows the area, can look at days on market, can look at all these factors and help you come up with a pricing strategy. It's very important because if you're a buyer going in blind on some of these houses, you'll miss the good ones, and on the ones that you could have got a better deal, you'll miss out on those as well. And their last prediction here is just on multifamily housing, which for a lot of people, obviously they're not going to maybe buy investment property. I'm always looking at investment property, and in the multifamily space, they expect below average rent growth in the near term as additional units are completed. And this is, to me, the most important part for most people. We expect rent growth to be between 2 and 2.5% in 2025. And this will be helpful for renter affordability as it represents the second consecutive year of nominal wage growth exceeding rent growth in certain metros, meaning what people make as income is outpacing the increases in rent, which is great, right? That's what makes a market affordable or not affordable. Now, if you're looking in the housing market, what the most important factor is right now, I would say after 23 years, the amount of times that we are spending with clients pre-approving them has gotten probably 3 or 4 times longer. And why is that? With insurance, taxes, loan programs, all the creativity, the pricing strategy of maybe having limited cash to close or really needing to buy the rate down. And then also when you're out looking, the insurance and taxes can also throw the payments off. There has to be a lot of communication between your team, if you're a real estate agent or a buyer, so that when you're out looking at a house, you know that you're able to qualify for that house, you know exactly how much money you're going to need, and what's the payment likely to be, even if we have to get an insurance quote up front. And we are doing that sometimes if it's not a house that's going to have, a bunch of offers. So we can at least dial in kind of where you need to be. So what does all this mean? Does it mean Florida is in big, I'll say crap, and for 2025? My answer is no. Anything's possible. If we get to 15, 20, 25,000 homes in inventory, there's going to be a major price correction. But if we were going to do that, we were likely to do that when rates were 8% and demand was really falling off a cliff. Most people believe that this year we will get, at least from 4.1 to maybe up to 4.3 million sales, a little bit lower rates, a little bit more demand. That's likely to be the tail of 2025. If you are in the real estate business, it's likely to feel very, very similar to 2024. And if you are in the real estate business, what you want to be able to do is say, I don't care about the market. Here's my plan. Here's what I execute on every single day. And if you don't know how to do that, I've spent a lot of years, I was a coach teaching new loan officers, for about 8 years on how to set up their day. Want to know what you can do? Reach out to me. I'd love to help. If you're a buyer saying, what special programs are out there to help me become a homeowner in 2025? Reach out to me. I'd love to help. Mainly, as the year goes on, it's the very beginning of the year, so the predictions are always fun, but we don't know what's going to happen. We are going to keep tracking all the data as it becomes available, and we'll look at it and we'll analyze it throughout as the year goes on. Remember, regardless of where you're at politically, if the economy is booming and unemployment is low and inflation is coming towards that 2%, the Fed is not likely to cut rates. Anyways, we'll keep tracking the data. If you have any questions on this or anything else, reach out to me. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week. I'll talk to you soon.